You may have seen some headlines recently about China putting new limits on beef imports. And, that kind of news can sound pretty serious right off the bat. But what's the real story here? For anyone involved in New Zealand's beef industry, hearing about new limits from a market as massive as China, well, it's definitely going to make you pay attention. But here's the thing, once you look past that initial headline, the reality for New Zealand is nowhere near as alarming as it sounds. So let's get into exactly why that is. Okay, so first things first, what did China actually announce? Let's just cut through the official trade speak and break down what this new policy really is. Essentially, China has introduced something called safeguard quotas. Now, in plain English, all that really means is it's a tool that countries can use to protect their own local producers from, say, a sudden flood of foreign products that might overwhelm their market. So, here are the key details you need to know. The new quotas won't even kick in until January 1st, 2026. They're set to be in place for 3 years. And this part is really important. This isn't targeted at New Zealand. It applies to all major beef exporting countries. All right, now we get to the heart of the matter. Why is New Zealand actually in a really strong position, even with these new global rules coming into play? Well, it really all boils down to one simple question for our exporters and for the industry. Just how much breathing room do we actually have under this new cap? And this chart tells the whole story. That first bar shows what New Zealand has been exporting to China on average lately. That's about 150,000 tons a year. Now, look at the second bar. That's the new duty-free quota, and it starts way up at 206,000 tons. So the bottom line is crystal clear. Our current export levels are comfortably below that new limit. There's a significant buffer between what we sell today and where that new ceiling is. Let me put it another way, because this is really the key takeaway. The ceiling is much higher than what we are currently exporting. There's plenty of headroom for our trade to continue just as it is, and even to grow, before those new tariffs would even become a factor. Okay, let's zoom out for a second to really understand the bigger context of our trade relationship with China, because the balance here is key to figuring out this outcome. When you look at all the beef that China imports from the entire world, New Zealand's share is only about 4%. We're a consistent, high-quality supplier, for sure, but we don't dominate their market at all. But if you flip that around and look at it from our perspective, China is a huge deal for us. It accounts for about 19%. That's nearly a fifth of our total beef export value, making it our second biggest customer. And that right there is kind of a strategic sweet spot. We're important enough to be a valued partner, but not so big that our exports are seen as some kind of threat to their local industry. This balance was absolutely a key factor here. So how did New Zealand manage to land in this strong position? Well, a big part of the answer lies in the professional engagement that happened behind the scenes. During the whole investigation process, New Zealand officials stayed in close contact with their Chinese counterparts. The main point they made was pretty simple. Our exports aren't harming China's domestic market. The final result is a quota that's actually better than what some other nations got. And all of this is built on the foundation of our existing free trade agreement. Okay, so we've looked at the policy, the numbers, and the context. But let's bring it all back home. What does this actually mean in practical terms for people here? So, here's the bottom line. For our exporters, the message is that it's pretty much business as usual. For consumers, you shouldn't expect any impact on the supply or price of beef in the shops. And for the wider economy, this result maintains really important stability with a key trading partner. So in the end, while those initial headlines might have sounded a bit alarming, the reality is a lot calmer. This is a policy change, yes, but it is not a trade shock. It's a structured adjustment to global trade, and it's one that New Zealand is very well positioned to handle.